Seattle real estate market is crashing. Hold on a second. This is something that I hear all the time from people who want to know, or they assume that the real estate market is going to crash. So today I'm going to take some time and we're going to talk through 3 different variables that will show us if the Seattle real estate market is crashing. If you think it's crashing, put a comment below. I'd love to know your thoughts about why it's crashing. So first we're going to look at the number of new listings that are coming on the market year over year. Then we're going to look at the number of delinquent mortgages and even foreclosures. Third, we're going to look at jobs in the area. And if you've been around the Seattle real estate market for a few years, you're going to see why things slowed down so much now in 2025. Without further ado, is the Seattle real estate market crashing? Let's get into it. So the first thing we're going to look at is the number of new listings. So it is no secret that the number of new listings in Seattle and the Eastside has really increased year over year into this year as well. So a lot of what this suggests is more of a rebalancing of the market versus a collapse. In April 2024, the Seattle city recorded 915 new listings compared to 775 new listings in April 2023. So that was an increase between 2023 and 24 of 29.2% year over year. So that is pretty good increase, to be honest. That does show an increase in the number of new listings. Now, the surge in listings also continued into this year, into 2025, with active listings increasing by 47.19% in some areas, and specifically on the east side of Seattle, they increased by 138%. So that's something that's really important to look at, is the number of new listings was increasing dramatically, even more so on the east side than it was in Seattle. The reason that we look at the number of new listings is the number of new listings gives us inventory, it gives us supply in the market. When we see these large increases, if the number of buyers are not taking up those homes or putting those homes under contract, it indicates that we have more inventory on the market and that maybe prices will slow down. But that's very different from what we saw in the pandemic from 2020 to basically end of 2022, 23, when there were not enough homes ever on the market. And that's why prices were going up so high. We saw 10, 20, even more % increases in equity within a year because there were so few homes on the market. In 2022, there was an increase of 15% of listings, and then they contracted. They went down by 5% in 2023. And that's primarily because there was this big boom in the pandemic, and then home sellers basically saw that interest rates were rising. So there wasn't a big compelling reason to put their house on the market and sell it when those interest rates were going up. Then in 2024, when the number of new listings hit the market, that really indicates that there was a lot of pent up sellers waiting, but they were finally getting used to these higher mortgage rates, and they kind of had to accept the reality that the mortgage rates were going to be higher. And then we saw a lot of those homes come onto the market. So let's take even June as a recent example. In the Seattle specific market in June of 2023, there were 1,576 homes available listed for sale. 2024, we saw an increase of 36.7% to 2,155 homes available for sale. And then another increase of 37.3% in June 2025 this year, up to 2,959 homes for sale. So this is just showing that there are a lot more homes for sale than there have been in the past 2 years. Now this is for Seattle specifically. Thinking about how inventory is coming onto the market is really important because a lot of the inventory means that there's more supply, and if there's not enough demand, it may feel like the market is not in balance, but what's important to remember is that it's still a seller's market. It still takes less than 4 to 6 months for these homes to be sold, which indicates that it's still a seller's market, even though it is still favorable to buyers. Now we talked about some of these homes are pent up because the seller saw the rising interest rate and didn't want to put their home on the market and go take out a new loan that had a higher interest rate. Some of this is also about the tech sector having layoffs, and that's probably why we saw an increase of 138% in terms of listings on the market on the east side between 20 2024 and 2025. And that's why if you watch the Eastside market, the market completely slowed. There's also just decreasing buyer competition, and that allows these homes to remain on the market. Honestly, they remain on the market anywhere from 30 to 60 days now. Like I said, it doesn't mean the market is crashing, because typically the market was under 1 to 2 months of inventory. So basically that means if we stopped selling homes today, it would take 1 to 2 months to sell them. 1.5 months to be exact in 2024. And now in 2025, it's 2.6 months. So that has increased. So that basically means it'll take 2.6 months to sell everything that's currently listed. And that's according to this article in the US News talking about the Seattle housing market forecast. This is important to know because it doesn't mean that the market is crashing. It means we're getting back closer to that 4 to 6 months of inventory, which is a balanced market. The last part about the number of homes for sale going up is that we also have to look that the median sales price has actually continued to go up as well. That is indicating that we're likely not seeing a crash because that continues to go up. Now, could even more homes flood the market and then maybe we see adjustments down in terms of price? Yes, but I don't think there would be enough that it would eventually flood the market so much that we would see a crash in the market. So yes, listings are up. We're getting to more of a rebalancing of the market than we are an actual crash. So the Northwest Multiple Listing Service showed that there was the highest volume of active listings since 2018. And so there's year-over-year increases like we've talked about of double digits. So what this indicates is a shift from a very extreme seller's market that we saw in 2020 to 2022 because of the very low interest rates, probably one of the biggest anomalies of the real estate market in history, toward this more balanced look at what has been happening or what seems to be going on in the market. Now let's move on to topic number 2, mortgage delinquency. Mortgage delinquency means when a homeowner has a mortgage and they delay their payments on their mortgage or they go delinquent. It doesn't necessarily mean foreclosure, it just means they haven't paid their mortgage payment on time. Seattle's mortgage delinquency rates specifically are very low when you look at the national average. So the national average in 2024 was 3.98% of mortgages were delinquent. In Seattle, it's 1.8%, so well below the national average. There was a slight increase from 1.2% in 2022 to 1.5% in 2023, and then now it's up to 1.8%. So yes, it is increasing a little bit year over year, but it's still extremely low when you look at the rest of the country. When you look at the foreclosure rate in Seattle, it's at just 0.2%. Yes, some borrowers may face challenges, but this is not the same as foreclosure activity across the rest of the country. It really indicates that a place like Seattle, where there's this high income and strong employment for the most part, has hedged some of the rest of the economy or hedged some of the uncertainty that might be throughout the rest of the country. You do want to look at a national average, specifically when we're talking about Seattle, so you can see the difference. The Mortgage Bankers Association reported that the national delinquency rate was 3.98% in Q4 of 2024. That's up from 3.88% in 2023. So Seattle's rate at 1.8% represents, an outperformance of those national averages. And it really suggests that there is some economic resiliency here in Seattle. That's a really important thing to think about. Serious delinquency rates, which are 90 days or more past due in Seattle, have remained stable at about 0.9%. And they actually decreased slightly from levels in 2023. Now, this is according to REI Inc., and they put out that report about that staying stable. Now, CoreLogic data indicates that the serious delinquency rate nationally dropped to historic lows in some periods, but Seattle still outperformed those national averages. So the maintenance of really low serious mortgage delinquency rates indicates that there is strength in the Seattle market specifically. Last but not least, what we have to talk about is employment data. We already already went through, the number of new listings is going up, not as many buyers to absorb that, so the market is rebalancing in that way. Second, we talked about mortgage delinquencies, and those are below national averages, so there's not a bunch of people who can't afford their mortgage. Those two indicate that there is not a serious crash coming. But third, and just as important, is employment data. So let's look at some employment data. Employment in Seattle has dropped. The growth rate dropped from 5% in 2022 to 2% in 2023, and further to 0.7% in 2024. All of that according to the Seattle government. Early data in 2025 suggests that a negative growth rate of 0.3% will happen, with the state losing approximately 9,000 jobs in the 12-month period and that ended in May 2025. Yes, there are broad economic challenges, but it's not showing a severe amount of job loss, especially when you look at the rest of the country. So obviously the tech sector is a big part of Seattle's economy, and it has been contracting. So jobs have been lost. The tech sector employment declined by 2.3% from Q1 2024 to Q1 2025, which followed some previous growth of 8.5% in 2022 and 2.1% in 2023. That's according to the Washington Policy Center. That shows that there have been a loss of about 48,000 positions year over year through August 2024. That is important to consider, especially as we're looking at the east side of Seattle, where a lot of those major tech companies are. But definitely there have been layoffs from Amazon, which has planned to relocate about 25,000 people to Bellevue specifically. Microsoft and other employees have reduced their Seattle area workforce. So those are all important to think about, especially as we're talking about what is going on in the east side market, where you see this major increase in homes for sale. And that may be to some of these people leaving because they've lost their job or they're no longer in the tech workforce based in Seattle. So Seattle's unemployment rate has gradually increased from 3.1% in 2022 to 3.9% in May of 2025. And in King County, that's at about 4.1%. This is according to the King County government. Yes, this is an upward trend, but these rates remain below the long-term average, which is 5.05% for the Seattle area. So you do have to compare this to an average. So yes, the unemployment rate is going up, but it's still below the average. Now, to balance out the tech sector, one thing you also have to think about is other sectors. So specifically education and health services, they've gained 11,800 jobs year over year, and professional and business services have added 3,400 positions, and manufacturing did go down though by 7,200 positions in the year. And so these are important to balance out that tech sector as well. So the construction sector has also experienced some volatility, with employment declining 4.8% from summer 2022 to December of 2023. Now, if you remember, there was a lot of construction going on in COVID because rates were really low. It was easy to borrow money. So that is one thing to think about as well as the hospitality and leisure sector showed a little bit of growth at 1.2%. This is really important to think about. So we take these three variables. We take the number of new listings, which has gone up year over year for the past 3 years, and is showing signs that we're getting into a balanced market, that some of the pent-up homes that were not listed because of the interest rate are now finally on the market. Not necessarily indicating that we've swung all the way to a buyer's market, which might indicate that we go towards a crash, but really more towards the middle, where a balanced market would usually be. For the past 5 years, buyers have been asking, when will there be more homes? When will there be more variety? And when can I not have to pay multiple thousands above the listed price just to get into the home that I love? And that is finally happening in the market. That, along with the mortgage delinquency rate being below the national average, yes, it's fluctuated a bit, but we don't see a bunch of people not able to afford their mortgage, and we don't see a significant increase in the number of foreclosures. Last, the unemployment. Yes, unemployment has gone up in Washington, still below the average of what we've seen, and it's still pretty modest. It's important to note that the east side might be impacted more from the tech sector laying people off, and that's maybe why you see more of those homes on the market. But overall, we're not seeing huge amounts of layoffs that would drive people out of Seattle. A lot of times people will talk to me about, oh yeah, I remember when Boeing thought they were shutting down and leaving Seattle, and there was this big billboard that said, well, the last person in Seattle shut off the lights. That is not really happening. There's still people coming to Seattle. There is still job growth in certain sectors, although it may not be tech. So the next time you're wondering, is the Seattle market crashing? At least right now, July 2025, I don't believe that the Seattle market is crashing. Yes, there are changes. Yes, there are new things that are happening that are rebalancing the market, but overall, I do not believe the market is going to crash. We'd have to see a major change in what's happening, and we'd have to see a ton more listings, no buyers out. We'd have to see the interest rate probably go up, so buyers could not afford as much, and right now it's coming down. We'd have to see mortgage delinquencies go way up, and we'd have to see a lot of loss in employment. And we're just not seeing those things right now. I'd love to hear what you think. If you think the market is crashing, let me know why you think so and where the data is, and let's have a conversation about it. And of course, if you have questions about Seattle real estate or you want to get started in the buying or selling process, we are here. Just reach out over text or email to schedule a free consultation with us today. Thanks for tuning in. We'll see you again next time.